So let's get to the Fed point. Let's put this up there, which is that the Fed is considering that 100 basis point rate hike, the biggest hike since the 1980s, specifically in reaction both to this inflation report and to just from the overwhelming pressure that comes from Wall Street and from elsewhere. And the funny thing is that even Wall Street, and this is part of the reason why the S&P 500 and others, even though their overwhelming consensus is around that the Fed is going to do this, they are still reacting in a negative manner every single time that the inflation report gets worse, because they know that's only going to put even more pressure from the quote unquote consensus on the Federal Reserve to increase the rate hike. And that only means that recession is just more and more and more and more likely. And I think that is just the scariest part of all of this, is what we talk about here. I mean, look, are zero interest rates perfect for the economy? Probably not. I mean, it's probably not a good thing, all these fake companies and all these other things. But to have such a precipitous rise so quickly, I don't think we can really describe what it's like to live in that environment. I mean, major Fortune 500 companies have to cut benefits and have to cut workers. They will always cut worker pay before they have to cut share price, but eventually, or stockholder dividend. Eventually, that will happen too. And so you're just going to see like an overall, like a trickle down recession without any of the trickle up benefits supposedly on the way back up. And that's what they always promise, this quote unquote soft landing. I just don't think that's remotely possible. When you're moving at this level of speed, these things take months to manifest. That's right. In mortgage, housing, and all of that. So I think we're going to see this for at least a year, maybe 18 months plus.
Yeah. Well, and what they point to here is a few things. So the odds of a 100 basis point, which just means a full point hike, jumped more than 20% after we got that report. Hopes of a Fed pivot, they said, were firmly dashed, as if they hadn't been already. You've got Nomura economists changed their forecast for the Fed's September meeting from a 75 to 100 basis points, writing that a more aggressive path of interest rate hikes will be needed to combat increasingly entrenched inflation. Frickin' Larry Summers is out here tweeting that if he was a Fed official, he would pick 100 basis points move to reinforce credibility, whatever that means. This is the same man who said that we need to get the unemployment rate to 10% in order to get this under control. Just so you know. I mean, Jerome Powell is out there directly saying we need to get wages down. There's going to be a little bit of pain. Like, they're not hiding it. And again, I think if anything, the fact that you have inflation numbers continuing to be bad shows you what they're doing so far. I mean, there may be a huge lag, but it's also not getting at some of the core reasons we have inflation to start with. I mean, the shelter cost is the perfect example, and I know we've gone over this a few times, but I just think it's really important to underscore. One of the big reasons that housing costs keep going up is because we haven't been building enough homes. Hiking interest rates makes it so that builders are less likely to build more homes. So not only are you not dealing with the problem, you're actually exacerbating the problem in that particular instance. So I think it's a really, really bad situation. I think it's a very dangerous situation because you just don't know. These are blunt instruments, and you just don't know what kind of a massive effect they can have on the economy, because there is a lag between when those rates are hiked and when the pain actually hits. The last time that rates were hiked at this level of 100 basis points in the 80s, it drove the U.S. into a deep recession. We reported on, I guess it was Tuesday, about that research from an economist with the Federal Reserve Board of Governors who said, hey guys, we got to be careful with this, because we could have a very similar circumstance to what happened coming out of the Spanish flu, where, we had these supply chain shocks and all these issues, and we have this aggressive interest rate hiking that could cause a severe recession. So there's a lot of reasons why the Fed should be very cautious here, and instead it looks like they're moving in a more and a more aggressive posture.
Absolutely. Look, it can be bad. We'll underscore that housing point, and we're going to continue to watch it. But it looks like the prediction of, quote, some pain looks very much like it's going to be an understatement.
Indeed. Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing, and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.